Is the housing market going to crash? What buyers and sellers in Louisville should know. Hello, I'm David Hittle with United Real Estate Louisville, and you may have seen headlines recently asking, will the housing market crash like it did in 2008? Today, we are going to break down what leading economists are saying and analysts are actually talking about, and what it means for people buying or selling right here in Louisville. So, first, what are the experts saying? Well, according to multiple forecasts, a widespread housing crash is very unlikely in 2025-2026. For example, a housing canary analysis states that despite ongoing economic uncertainty, most experts agree that a full-blown housing crash in 2025 is unlikely. Another bank rate article quotes several economists saying that while price growth will moderate, they do not expect a recession in housing. According to JP Morgan, one of the largest banks in the U.S. housing market is likely to grow at a very subdued pace of 3% or less, but not collapse. In short, the fundamentals today are not like 2008. Lending standards are stronger, equity levels are healthier, and foreclosures are much lower. So why does all this matter to us here in Louisville? Well, because if a crash is unlikely, that means homeowners have less risk of a dramatic drop in home value. So they can focus on longer term investing, and home ownership, in that case, remains strong. For buyers, it means waiting for a crash may keep you on the sidelines longer than you need to be. For sellers, it means you don't have to think about the worst case scenario in pricing, but you still need to be realistic and strategic. So, what do we need to look out for? Even though a full crash is unlikely, there are still risks that you should monitor. Elevated inventory in specific neighborhoods may put downward pressure on prices locally. Mortgage rates remaining high, above 6%, could limit buyer affordability. If consumer debt is rising, it could impact housing demand as well. Analysts note that while a crash isn't expected, corrections in certain markets are very possible. In Louisville, keeping an eye on supply in your specific price range is key. Some segments may feel pressure, even if the broader market is holding steady. So, what does this mean for you? Well, if you're a buyer and you are financially ready and prepared, acting now may be wise instead of waiting for a crash that may never come. Lock in a mortgage rate and budget you're comfortable with long term. Sellers, price your home based on current market data, not on fears of a collapse. Focus on presentation, condition, and timing to capture demand when it is there. The bottom line here is a housing market crash like we saw in 2008 is not expected for most markets, including our market, Louisville. Instead, we are looking at moderate growth, balanced supply demand, and regional variation. If you are buying or selling, your strategy should reflect that reality, not fear and not complacency. If you'd like to review what this means for your neighborhood or home in the Louisville market, we should connect. I am David Hittle. I'm with United Real Estate Louisville. You can call or text me at 502-489-1135 or visit my website, Shopkentuckyhomes.com, for local insight and expert guidance. Thanks again for watching, and subscribe for all the local real estate updates and smart advice you can use.